Hi, everyone. Welcome to today's webinar. It's great to see everyone come through. My name's Chris. I'll be moderating proceedings today. We're just going to give everyone a few minutes to filter in. I think we've got a pretty big RSVP list today. So yeah, we'll kick things off in a few minutes. In the meantime, feel free to message us in the chat box below whereabouts you're from in Australia and what industry you're in. Just to run through some simple housekeeping as well. Throughout the course of today's webinar, if you are interested in asking Pat a question, please do that via the Q&A section. So you'll see at the bottom of your Zoom screen, there's a Q&A button. If you click on that, you can submit questions via there. That just helps us sort this kind of stuff out from the chat. There'll be a lot of activity through there. We'll be posting some links. So yeah, please try and keep that to the Q&A section. I'll quickly run through the agenda as well while we wait for a few more people. So obviously the theme of today's webinar is the federal budget. So we're really lucky to have Pat in from Pop Business.
How's it going?
Who is a real specialist and is really on top of all this kind of stuff. So yeah, so the idea here is to really break down the budget and what it means for your individual businesses. So, generally speaking, Pat will do, a bit of an overview and outlook of the economy. He'll run through the key announcements within the budget. And we've outlined there, one of the real key announcements is this 120% tax deduction. So that's really going to be really useful for small businesses. So Pat's going to run through that in some more detail. And then, like I mentioned, we'll make some time there for any questions that filter through that Q&A section. And we've got a bit of a special offer as well towards the end. So yeah, Pat, I think we can kick things off.
Excellent. I'll get started. So yeah, I'm the CEO of Pop Business and Pop Tax. We're a chartered accounting firm located in Surrey Hills. We work very closely with LawPath, and we've got a joint accounting and legal subscription. So you might have come across us and worked with us there. We've specialized in business advisory, tax compliance, virtual CFO, and we really work closely with businesses to help them build their dream business. So yeah, really excited to be presenting. The budget happened just recently, and there was a few key changes that we're going to run through. A few things that will affect potentially your business. There's a few things happening in the market that we can let you know about. And as Chris mentioned, if you have any questions throughout, just please in the FAQ, jump in and chat, and at the end we'll address those questions. And yeah, so I'll get started. So just to start, the government releases a mid-year economic and fiscal outlook, and that got released in December. What's happened since then is they've adjusted their forecasts, and we're actually looking much better than expected. That's mostly due to commodity prices. So, Australia is such a strong mining country, so that's really, driving that's the backbone of the gross domestic product, and that's really helping keep the economy strong. They're expecting the net debt to peak at 44.9% in 2025, and basically for every 6 months that commodity prices stay at these elevated levels, the budget position improves by nearly $30 billion. So they've got a really strong effect on the government's cash flow and GDP levels and the economy in general. So we're in a pretty good position over the next few years based on this. There's been a few key announcements. So the big one is the underlying cash deficit will be around $78 billion. In saying that, it is $20 billion better off than what was forecasted. So that's a good thing. And if commodity prices keep at those elevated levels, it means that we're going to have continued, a continued better cash flow position, which is good. The downside is cost of living is definitely increasing due to inflation, which we'll touch on. And so the government's brought out a few things to help with that. A once-off $250 payment to sort of welfare recipients, and they've increased the low to middle income tax offset. There's also 120% tax deduction, which will run through for small businesses. And that's to upskill employees and also to encourage digital adoption. And the upskilling of employees seems to be a common trend through this budget. We've got a bit of a skill shortage. Unemployment's really low. Businesses are struggling to find staff at the moment. So they're trying to incentivize, upskilling and training your current team to help with some of those skill shortages. There's an expansion of the patent box regime to technology and agricultural sectors, and that's a lower tax rate and incentives for these businesses. They've released some climate and natural disaster packages, some extra funding for COVID-19. And yeah, the key thing is there's definitely some investment in the digital side of the economy, and that's cybersecurity. And for businesses, it's those additional tax deductions for expenses relating to getting your business online and digitized. So we'll just have a look at the market. There's sort of record low unemployment at the moment, which is making it a really tough hiring market. I'm sure if you're a business owner and you're trying to find employees, it's extremely difficult at the moment. It's a 50-year low at the moment, the unemployment rate. And what we're seeing is, businesses having to, promote early, give pay rises earlier, create staff benefits strategies, so a framework to retain staff. And so we're seeing, a really strong competition for employees in the market, given how low the unemployment rate is. And that's, making businesses have to be quite creative with how they hire and also how they attract staff and also how they retain staff. So that's happening across the board from what we can see. There's also some inflation at the moment. It's meant to peak at 4.25% this year, and then it's going to decrease over the next 2 years. What's inflation mean? It means the cost of things get more expensive. So the consumer price index is a measure of that. So in general, the cost of living increases, and that could be, higher. That could be a flow-on effect of higher wages, higher costs to do business, and in line with that, you should be probably looking at your pricing and making sure that you've buffered in, that those additional expenses into your pricing, and that's, across the board in multiple industries, things are just getting more expensive. So it's a good time to make sure your pricing has factored in these additional expenses, and you've got enough buffer there to pay your expenses and hopefully make some profit. GDP's increasing, the gross domestic product, which is the value of all the sort of goods and services. So there's a lot of activity in the market, a lot of transactions, good for business. As I mentioned, tough labor market, but the economy is quite strong. Off the back of the commodity prices, they're expecting a 10% increase, and which is, massive, so double digits. We've recovered really strongly from COVID-19, and yeah, the economy is in a pretty good shape. It's off the back of a lot of those commodity prices. And as I mentioned earlier, the mid-year economic and fiscal outlook, we're in a much better position than we thought we were going to be, and that was only, a few months ago. So the debt levels across the country, as in comparison to the other sort of G7 countries, is quite low from a percentage of GDP perspective. So the debt, whilst it might seem quite large, I think it's around $1 trillion. It's in comparison to the other sort of strong countries, it's not too high on a GDP percentage. So let's talk about that. One of the key things that came out of the budget was the technology investment boost, and that is if you basically, if you have expenses relating to digitizing your business, and that might be portable payment devices, cybersecurity systems, adoption of e-invoicing, and subscriptions to cloud-based services, you can deduct those expenses plus 20%, which means you get 120% tax deduction. So they're really encouraging investment in things to get your business online. And the way it works is from the budget night, which was the 29th of March, it'll run till 30 June 2023. If you have those expenses up until 30 June 2022, you'll include them in your next year's tax return. So you still get to claim them, but basically they'll all get claimed in next year's tax return. There's going to be a cap, an annual cap of $100,000, an annual cap of that applied on it. And just how this works in practice, if you spend money on an online cloud subscription, we've got the legal and accounting advice plan, you can deduct an additional 20%. So basically means you can get an extra $700 in tax deductions. And a follow on from that is to work really closely with your accountant at year end to make sure you go through your expenses and highlight which ones are eligible to include the additional 20% deduction. So it's really important you sit down and go through your expenses and make sure you maximize this claim. We're still waiting on the definitions of all this stuff. So they've gave pretty broad terminology at the moment. So we are still waiting on, specifically what the cloud-based subscription services mean and what what expenses can be included. So they'll release something for that soon, and we'll be able to have a bit more structured detail around what we can include. But this is a really good sort of incentive. Most businesses should be eligible to get this. And I think once you go through your expenses, you'll find there's a whole bunch of subscriptions and bits and pieces that you're paying that you can get the extra 20% tax deduction for. So this is a legal and accounting advice plan. We'll talk about this a bit later, but we've joined forces with LawPath to provide ongoing advice and support to businesses. It's a great product and just gives you access to expert accountants and lawyers to get your questions answered fast. And you're definitely going to come across hundreds of questions being a business owner, if not thousands. So it's good to have that support. They've also released a skills and training boost, and this is in line with upskilling employees. So we do have a bit of a skills shortage across the country, and so they're investing in encouraging business owners to invest in their employees, and that includes training and courses. So if you do provide training to your employees in Australia or online, they need to be delivered by an Australian registered entity. And if they're incurred between the budget night, March 2022 to 30 June 2024, you'll be able to deduct them plus an additional 20%. So this is a good way to invest in your team and get an additional deduction. Exclusions will apply to in-house training. So you do need to pay for it via a provider. And the key thing as well is if you have it from March to 30 June this year, you'll include it in next year's tax return. And so you will, any training incurred from say, March, 29th of March till 30 June, you'll put in next year's tax return. So you'll still get the additional 20%, but you'll claim that boost in next year's tax return. So yeah, really good incentive to upskill your current employees. And it's going to run a little bit different, so it's got an extra year. So as noted with the technology investment boost, that only runs until 30 June 2023. So you've got pretty much the next year to claim all those expenses and get your business digitized. And the training will run an extra year, which is good. So you get a bit more leeway to have those expenses for your employees. One of the big ones is the apprentice and traineeship subsidy. So that's getting extended. That's been really good. That's been running for the past year, and on a quarterly basis, if you have an apprentice or a trainee, you get a wage subsidy for their wage, capped at $7,000 per apprentice or trainee per quarter. And that's seen a lot of additional hires for apprentices and trainees. So if you are thinking of hiring an apprentice or trainee, it's important to do so before 30 June. The reason being is they're changing the subsidy from a boosting apprentice commencement, which has sort of been running for the last year, getting extended to 30 June. And they're having a new incentive called the apprenticeship commencements, completing apprenticeship commencements wage subsidy. And what that will mean is, so previously you could deduct 50% of their wage, capped at a maximum 7,000 per quarter. For the second and third year, you'll still get these subsidies, but they'll be reduced. So from 7,000, they're going to reduce down to 1,500 for the next year. To my knowledge, it still runs on a quarterly basis through those registered trainee and apprentice providers. And by year 3, it's reducing down to 750 a quarter. So it's a good win. If you've got apprentices and trainees, you can still get those wage subsidies, which is great. That is going to reduce over the next couple of years. One of the big changes was the employee share scheme, which has been changed only just recently. I think one of the key things was, Australian entities, if you were an employee share scheme participant and you left the business, you got taxed upon leaving the business. And we're one of the only countries that actually had that in place. And so they've removed that. So if you are an employee share scheme recipient, you can leave and you're not going to get taxed whenever you leave the business. So that's a good win. They may not be able to sell their shares at that point, but they have to pay the tax on it. So they've changed that, which is great. And it's hopefully going to put us on level with the UK and US and these other countries and have a better sort of employee share scheme system that can attract quality talent. They've also changed a few things. So there's no limit on the number of options that you can offer. And they've increased the cap from, I think it used to be 5,000 per year to 30,000, which is great. So increase the value of the options that an employee can purchase. And they've also included dividends and cash bonuses to be included. They've also reduced the reporting requirements, so removed a lot of the red tape and made it a bit easier to transact in this way, and less cost to do an employee share scheme and less reporting requirements. So that's a really welcome move, and we might see a lot of employee ownership in the future. Just on that note, if you do need help with an employee share scheme or an employee share option plan, you can get in touch with LawPath and POP, and we can help you out. There's a few ways that you'd want to set it up, and there's certain percentages and the way you calculate the vesting, when the vesting occurs and how it occurs, what documentation you need. So if you need a hand with that, please get in touch. The government's made a few grants non-assessable, non-exempt. So some of these are the accommodation support grant, commercial landlord hardship grant. There's a performing arts relaunch package. So you can have a look at those, which is good, which means basically if you receive these grants, you don't have to pay tax on them. So that's a welcome move that, they were getting these grants because they needed them. So it's great that they're not getting taxed. Businesses aren't getting taxed on these grants. COVID tests, I'm sure a lot of businesses had to pay for COVID tests. And so basically they're going to be tax deductible, and this will ensure that FBT isn't incurred on these tests, given that they will have the otherwise deductible rule, so that you won't have to pay FBT on providing those. There's still some work to do on that, so we're still waiting to hear further information. Given the FBT year ends 31 March, there's basically, you got to do a judgment call. Do you include it or not include it? If you do include it, you might be able to amend it and exclude it later. But we're expecting that these tests will be deductible. Another change is gender neutral maternity leave. So previously there was 20 weeks of maternity leave paid by the government. Usually it was 18 weeks for the mother and 2 weeks for the father. They've updated this so you can choose how you split those 20 weeks before. And the key benefit to this is if the mother is a primary breadwinner, she can go back to work and the father can still receive the benefits. So it's just, instead of it being so rigid and assuming the father's a breadwinner and providing 18 to 2, they're changing the split to be, we'll still do 20, but you can choose who takes it, who takes what. And they've increased the limits to, so it used to be 150K, 53K per individual. They've increased it to a family limit now of 350K. Superannuation's increasing. This is already legislated, so it's just a reminder that from 1 July, it will increase from 10% to 10.5%. And that's in line with the previous the previous super legislation that they're over the next few years, they're getting it up to 12%. So it's going to keep incrementally increasing. So this is more a reminder that, yeah, super will be increasing. So if you see it 0.5% come up from 1 July, all your payroll software, online businesses would have that already, built into the software, so you don't have to worry about it. But if you just notice that it is 10% above 10%, that's why. The company tax rate is decreasing to 25%, or has decreased from 1 July 2021, and that's obviously in line with previous changes, so not too much to note there. However, good to know that it has decreased, and so when you're doing your tax planning at year end, you can obviously leverage the 25% company tax rate, which is great. Some other measures, the pay-as-you-go tax installments, usually they go up at 10% per year. So this is basically if you paid business tax in the previous year, on a quarterly basis, you have to pay a quarterly installment. They usually automatically get calculated, pay-as-you-go tax installment, and they automatically lodge usually as well. So you can amend them though. If you've found you've got a decrease in your net profit, you don't expect your tax to be as high, you can work with your accountant to amend these. They lodge automatically, and sometimes it's hard to amend them, but you can always do a negative one in a future quarter to eliminate the previous ones if you believe that you're not going to be in the same position as the prior year. But it's just good to know that they'll automatically do a reduced increase. So instead of doing a 10% increase, they're doing a 2%. So that'll reduce your quarterly installments. If your business is doing better than last year and you've got more profits and you expect more tax, you will save some money in your quarterly pay-as-you-go tax installments. Obviously, you'll still pay the tax on the profits, but you might get a bit of a break to pay it till the following year, May, as opposed to during the year. They've extended the low to middle income tax offset, and they've increased it to $420. So this is part of their cost of living sort of thing that they're doing. So basically, if you're earning between 48K and 90K, you'll automatically get the $1,500 tax offset. You would have remembered last year that 1080 tax offset. So it's the same thing. They've just increased it by $420. This is the last year that they're going to offer this. If you're not in the 48 to 90K, it just changes based on your income. If you earn above 126K, you don't get anything. And if you earn below 37K, you get $675. You don't need to do anything to get this. It's automatically applied. So when you lodge your tax return, in your tax return, you'll see there's a tax offset section. And if your income is within these sort of brackets, you'll automatically get that tax offset. There's a fuel excise reduction of 50%, and that basically just means they're charging less to the fuel suppliers, the people that are at the pump. So hopefully they pass on these savings, and we're expecting the price of fuel to come down over the next 6 months. That's directly related to the cost of oil being so high, which is related to Russia and the Ukraine. And so this is a good measure for businesses that use their car a lot. Fuel's been crazy, so it's good to get some relief. Be interesting to see how much is passed on at the pump. There's an increased investment in manufacturing and agriculture. So a big part of the budget was creating a lot of incentives and grants for businesses that are in manufacturing and agriculture. And so if you're within those industries, it's a really good opportunity to capitalize on some of these incentives and grants if you fit the criteria. There's a lot, so I didn't put each one. There's quite a number of these. So if you're interested in finding out more, you can get in touch. They've increased the first home super saver scheme from 30,000 to 50,000, and they've extended the patent box regime, which I mentioned earlier, for technologies and agriculture. And it's a reduction of tax rates, and they have some incentives within that. But it's important to note these measures are not yet law, so they're still getting finalized as we speak. Cool, so that was it. Just to recap, I suppose the key things that will definitely affect your business is most likely going to be the skills and training boost. So you will get those additional deductions for training expenditure, and the technology investment boost. So it's a really good time to upgrade your assets, and if you need subscriptions for certain things, if you're not operating in the cloud, it's a good time to look at it and get some additional the tax deductions for that. The apprentice and trainee subsidy is a big one, so extending that and then extending it till 30 June and then over 2 years is quite good. And the employee share scheme reform is quite big too. So we find it's a great it's a great way to attract quality staff and retain quality staff, as their options and shares will vest over a number of years. So it's a good way if you want to lock a staff member in that is going to be really good for your business for 4 years or more. You can set up an employee share scheme, give them a little bit of ownership in the business to keep them. Yeah, those were the key changes: the low to middle income tax offset, and also the pay-as-you-go tax installments decreasing as well. We've got an exclusive webinar offer. So if you sign up today to the legal and accounting advice plan for $199, you get a 1-month trial, sorry, for $199. It's a really great product. So if you're looking to get ongoing accounting and advice support for your business, highly recommend you test it out. You can just trial it, see what you think of the advice. We've got really great team that works on that. So I'm sure you'll get a lot of value, and a lot of your questions that you're going to have throughout the year, you'll get answered in a really timely manner.
Ooh, thanks, Pat. Just to add a few points as well, there's a few people asking in the chat about whether they'll have access to today's webinar. So we'll be sending out a recording to everyone via email, and just with some more details on the presentation and today's offer as well. So keep an eye out for that later this afternoon, early tomorrow. Secondly, as well, if you do have any questions, try and get them in now. We've got a little bit of time left with Pat, and so it's a really good opportunity to get your questions in. I do have one, Pat, if you want to jump into that. So it's a bit of a specific one, but Emily's asking, so if I bring an employee and receive the BAC, so the apprenticeship program, can my company receive 120% back for the course that they do? So I think she's implying here, if they pay for a course for that employee, can they then claim that back?
Yeah, look, I'd assume so, but we still need to see the legislation on this. So we're still waiting to see the specifics of what's included and what's not. But basically, if they're an Australian provider, so if they're based in Australia and the employee's based in Australia, and if the course is paid for between the dates, the budget night and 30 June 2024, I believe so, yes. So as long as it matches that criteria, basically external training providers, you should receive that 120% tax deduction. But given they're getting the apprentice subsidy, I'd just double check once it comes out if there's anything specific to that, i.e. if they're receiving another grant, then potentially not, but I'd be really surprised. The point of this is to give deductions, additional deductions, if you are investing in training and upskilling. And so that kind of getting an apprentice on directly, is helping us with that. So yeah, I think it's highly likely, but we'll just need to wait and see what comes out. Sounds like it's going to meet the criteria if the payment is done so in that time period. So I'd assume yes, but we'll just need to get some further information.
Cool. Another one's come through as well, which is a handy question. So Peter's asking basically about, if their business takes up a financial or an accounting software, so an MYOB or a Xero, can they then claim that 120%?
Yeah, I'd assume yes. So again, the definition is really vague. So they've said cloud-based service subscriptions, definitely technology. So I would say, I don't want to say yes until I see the legislation, but yes, like that's what they're implying. So if you've got digital subscriptions for online, for anything online, the point of it is to definitely help you with those. So I'd assume accounting softwares would fall into that definitely. Actually, I did hear something recently about, I think it was MYOB or one of the head of the software providers was saying, it's a welcome measure and it's good because, it's good for their business. And
Of course.
so of course, because they're going to get more clients. So I'd assume that whilst they haven't specifically given the criteria, it's really vague wording, but it's like very, very likely that that's exactly what you can deduct with it.
Yeah. Peter, if you're still on the call as well, a bit of a plug here. We work closely with MYOB, so if you are interested in that, we've got a 6 months free offer with them. So if you're interested in that, I'll just put it in the chat section now. So with that, if your business is under 12 months, they'll give you 6 months for free, and if you're older than that, you get 50% off. So if you are looking for accounting software, it's a really good way to start out at a bit of a discounted rate. Another question, Pat, again, a lot of them tend to be around the 120% deduction. And I guess this might be hard to answer, but there's a question around whether prior subscriptions could be claimed. So if you're already, say, on an existing subscription, whether you could claim that back, say you purchased it within the same financial year.
So yeah, I think from what I can see is it's specifically around the time of the expense. So if you have previously paid for the expense, it's not going to be eligible, but if you pay for it after, it could be eligible. It's a really good question. My understanding, my assumption would be yes, it's going to be deductible, but only from the point past the budget night onwards till 30 June 2023. So if you do have those subscription expenses past that date, then I'd assume yes. It hasn't said whether it needs to be new or existing. And the point of it is to get businesses digitized, to take on new digital subscriptions, and it's to try and bridge the gap so that a lot of these small businesses can compete and have their businesses being in the digital environment. So it's a really good question. If they've previously got a subscription, does the expenses past budget night count? I'd assume yes still, because I think it's going to be, I don't think they're going to say new. However, we haven't seen it yet. So it just says if expenses past this date, and it says if they're in this bracket of expenses. So if they're cloud-based subscription businesses or cyber security, they just gave a few examples. I'd assume yes, and we'll find out more information regarding existing subscriptions shortly.
Cool. One last question that's come through, again, very similar, bit more technical, I guess. So there's a scenario here where a business has transitioned from a sole trader to a company. However, they've purchased their subscription whilst a sole trader. So they're asking, where they would claim the deduction. Would they claim that as a sole trader or in their existing company?
It depends. So that it depends on the nexus of what the subscription is getting used for in relation to the income. So basically, if you buy a subscription as a sole trader, however, it's for the company and the company uses that subscription, you should deduct it under the company and you'd put it through as a loan to the company. You could potentially get in touch with that provider and ask them to update the name of the subscriber. So just say, hey, I purchased this as my sole trader. It's actually for my company. It doesn't matter where you pay it from. At the end of the day, if you're using it in your business and it's a genuine expense, then you can deduct it. It's just the mechanics of how you put it into the company, most likely through a director loan account. So you get it basically goes in, you put it in through your director loan account, and then you can take that money back out of the company tax-free because you've contributed that money into the business. So yeah, it's likely you can definitely deduct it. And if you do have other expenses you've paid for personally, but they are for your business, you can just bring them in through your director loan account.
Cool. So there aren't too many questions left, really. I think that's about it on the question side. A bit of a segue into, we did have one question about just providing some more details on the legal and accounting advice plan. I guess, at least on my end, some of these questions are really great examples of what you could potentially ask, your accountant or even a lawyer on the legal and accounting advice plan. So, particularly if you're a sole trader moving to a company structure, that's a super common one that both our lawyers and the accountants from the POP side will work on. And the beauty of it is they'll often work in tandem there, given our relationship. So I guess maybe, Pat, if you can provide a bit more context on the accounting side, what are the type of questions that small businesses are coming through to POP and asking?
Yeah, definitely. It's pretty broad. So we get a lot of how much should I pay myself? What's the best way to pay people, employees, contractors? There's questions around GST. There's questions around best business practices. There's questions about software, accounting software, and how to treat transactions. So yeah, it's really varied. Employment comes in, and that kind of is accounting, and overlaps with legal, and employee share scheme and share option plans comes up a lot. And we help clients with that, working with Damon and the LawPath team. So yeah, pretty varied. A lot of depends on the sort of maturity of the business. If they're really new to business, they'll have a bit more questions that are more just trying to get that educational side of things, so that they can understand what the lay of the land is and what's happening, so they can make decisions. And then businesses that are a bit more mature start to have a lot more technical questions coming through that can get quite complex. So yeah, it's very varied, and we cover the full breadth of businesses, just starting out all the way through to established businesses that need really quality ongoing advice, that have a lot of technical questions. So yeah, we get thousands of questions, and yeah, the team's really across all the various scenarios and the tax legislation, and also best business practices, and how to best optimize software and apps you should use, and all these bits and pieces. So there's just so many things that are going to come up, and instead of you trying to work them all out yourself, there's a team of experts that can fast track that and put you in a much better position.
100%. I've just had another question come through that I can answer here. So, I know that a lot of us on the call today, are existing either customers and subscribers of LawPath. So, a question's come through about people who are on an existing subscription, if they want to then jump into the accounting advice plan as well. So by all means, we can do that. Feel free to just reach out to us. A member of our team can run you through how that will work logistically. So, we'll make sure that you don't, pay for multiple subscriptions. So that's not a concern at all. And in terms of the offer today as well, it's a really good opportunity to trial this plan. So if you are an existing user and you're thinking about potentially, venturing into the accounting side of things, this is a great opportunity to give it a go. It's really a 1 month trial. There's no commitment past that. So, you can jump on a call with an accountant from Pop, see how you find the experience. And then if you're interested in then continuing on, we can definitely help out with that. So I've just put a link into the chat to the page where you can access this offer. As well, we've got a few minutes left. Feel free to comment yes. We can get our team to reach out to you and just run you through what the offer looks like and how it works in more detail. But yeah, I think Pat, maybe we'll give it a few more minutes if any more questions come through, and then we can wrap it up for today.
Yeah, sounds good. And I think as a follow-on, we'll once we get some further information around the more specifics around the technology investment boost and the skills one, we can provide that information so that you're those specific questions around existing software and things like that. We'll have the answers for those once it's released. So we're really on the ball. We're watching it all the time, and as soon as it comes out, we're really on top of it and creating some content and getting it to you guys, so you've got that information at your fingertips. And so yeah, we'll, as a follow-on, we'll have that information once it's legislated and once we see what it looks like. But yeah, we're anticipating some some really good deductions for businesses that are digitizing their business. And part of that we're expecting is this legal and accounting advice plan. I don't want to say definitely until I see it, but it does say cloud-based subscription services, which is exactly what this plan covers. And so, you'd get a really good additional deduction if you jumped on this. So yeah, it's definitely worth looking into.
I should mention as well, I've seen, throughout the chat, there's a few businesses here from Melbourne and Victoria. So currently at LawPath, we're involved with the Victorian government's small business digital adaptation program. And essentially what that is, it's a long name, but essentially it's just a rebate program. So for those businesses in Victoria, you could potentially claim the cost back of, say our legal advice plan. If you're looking at the legal and accounting advice plan as well, you can claim back a portion of that. So the way that works is it's a $1,200 rebate for eligible businesses. So there are some criteria there. So yeah, if you are from Victoria and you're on the call, again, reach out. Someone from our team would be happy to run you through that. It's a really awesome opportunity that's only around, I think, for another 2 months or so. So the government's allocated about $5 million in funding. But by all means, if you're outside of Victoria, like Pat said, it's looking very promising that you'll be able to take advantage of the 120% tax deduction. Awesome, Pat. So I think that's it for the questions as well. We haven't had any extra ones come through. So yeah, I think we'll wrap it up there. I'll give everyone one last chance. If you want someone to reach out from the team, just chuck a yes quickly into the chat. But yeah, I think that's about it for today. Thanks for your time, Pat.
Yeah, not a problem. Thanks for having me.
Awesome. Thanks, everyone. See you.
Thanks, guys. Bye.